All right, so now I'll talk a little bit about the model and give you a little bit more details, and I'll probably feel like I beat you up and you're like, man, this is depressing. This is not what I was hoping to hear. I promise it was good stuff for you, okay? Now, I want to talk about where do these setups form. So in your journal, this is like a subtitle area for this video. Where do setups form? Okay, think about that for a minute. When you're looking for this idea that I'm sharing, the fair value gap, where would you expect them to appear in price? Obviously, I've been teaching you to run above an old high or relative equal highs, and if you're bearish, that would set up a scenario where the market goes up, sweeps the highs, breaks back down below the highs, short-term lows taken out with displacement, and then you go back through that displacement leg looking for a fair value gap to short into. That's pretty simple logic, isn't it? Well, visually, I want you to understand it. Okay, so that way, in your mind, I do this exercise all the time with my students. Can you draw out with a diagram, like if you were at work and you're trying to explain to your friend or coworker what it is you're looking for in price? Now, they're not going to understand what you're doing, but how would you draw it out in price or in a napkin with a pen or pencil? What would it look like? Well, you have obviously a level of relative equal highs, and we're just going to use that green line as an example of that. And price is moving towards it. Small little correction or so, and it runs towards it again. And then finally it runs through those relative equal highs. Okay? At that moment, as soon as it goes above it, you start panning back through all of this price run in here and find the nearest short-term low. Because that right there is going to be your trigger. It's not that it goes above this old relative equal high and then goes down below that. That's not it, folks. That's not it. You have to see it go below that in displacement with the energetic move, take out a short-term low. That's how you filter out these trades that may not be high probability. So that area right there, as soon as you run above the relative equal highs, in your mind, you're looking for where's the trigger. Because until it takes out that short-term low, there's nothing going on. There's no trade there. There's no setup there. Then when there's displacement, that displacement leg in price action, that right there is your foundation to the setup. That's it. Once you have that, then you can go into that area and look for the fair value gap. That's the logic. That's the pattern. That's what you're looking for. This is if it's bearish. Now, if those relative equal highs would have been traded through this morning, I would have expected this scenario. Okay? Before it ran those relative equal highs, I was looking for, like down here, price was trading down into that area. I was showing you my interest today. I'm watching this, where it was likely to go down to, this is kind of like the low. In my mind, I'm kind of using it as an example. What I was expecting price to do once it got down into that fair value gap that I was saying. I'm watching this, that little arrow. Okay, I showed that little gap. I was expecting this type of movement to set up the run above those relative equal highs. But there was no movement here to set up that run either. So two scenarios that I would have loved to seen develop just did not pan out. It just simply wasn't there. Now, I'm going to teach you another approach, and this is kind of like what I was expecting. And had it panned out this morning, if it would have gave the real setup, which it did not, I've already shown that, that little fair value gap that I was waiting to see a response in, it didn't do it, just melted right through it. But if it would have done this, but this is going to be a sell version, okay? Just reverse it for the going long idea. If you have an old fair value gap above you, okay, so you have an old fair value gap, and the market's below it, and it's trading up, and you're bearish, but you think it's going to go up to that fair value gap. The same logic when it trades up to the relative equal highs. Once it trades into that fair value gap, it doesn't have to completely close it. If it trades up into it, anywhere between here and here is good. Okay? If it trades above it, you can really make it simple and say, okay, the low of the fair value gap, treat that like the same logic that you use for the relative equal highs. Doesn't that make it simple and easy? That way you don't have to worry about, how hard do I need to know? You don't need to know that. Because you're waiting for something to happen. What is that? Once it takes out the low of the fair value gap and trades in there, you go back through that leg and see, okay, here's what. There's that trigger. That's that shift in the market structure you're waiting for. Then you have the displacement leg. So once you have that, you can go back in and look for the fair value gap. Okay, so that's the two entry strategies for this model. There's no other way of worrying about what does it look like this. Now, visually, this is what you're doing. Okay, it's simple. If it feels like it's not simple, watch this part of the video a couple of times and then go back and look at price action in live data and in old back testing. Go back and look at old moves and you'll see this logic is there. Okay, it's algorithmic. It repeats. Unfortunately, today, it didn't give me the setup to allow myself to sit down with you tonight and say, okay, this is what I did, because I was going to trade it. Okay, I was going to enter at the low, run the highs, go short, and ride it down that way too. I was going to do it, but nothing panned out. It didn't mean that the model's broke. It doesn't mean that the model's broke. It doesn't mean that I can't find winning trades. It just means that the market did not provide the structure to allow this to form. Does it result in a losing trade? No, because the logic wasn't utilized that would have put me in a losing trade. It never formed. This right here, reverse the logic here. Apply it. That's the homework. Apply this logic here. Does this appear in the fair value gap that I was drawing your attention to this morning on the community post? No. And no one can manipulate and say it was. It just wasn't there, folks. So, it's just a missed move. And there's nothing you can do about it, except for beat yourself up and say, oh, I wish I would have, could have, should have. And that stuff doesn't make you money. And it doesn't take any more money out of your pocket. So don't do it. Don't waste time doing it. It's toxic thinking. So hopefully I don't need to bring up all this negativity anymore and address any of it like this, because I'm never going to entertain it in a video again. But I want to lay the foundation and provide my response to anybody that would think like this or say this, whether they're trolling, whether they are sincere, whether they feel like they've been victimized. Okay, you've done that to yourself. If you pushed a button and you entered trade, you did that. Nobody in this community, including me, chief of all of them, never told you to buy or sell anything. You're never going to have instructions where I'm telling you to buy or sell anything.